we do want to check in on the major indexes and provide our analysis of that first. So, Dave, kick us off here. We have seen a nice move higher over the past couple of sessions. How much more room do you think that we potentially have to go to the upside? Give us your take on the NASDAQ technicals at this juncture.
Sure, Ali. I wish we had a crystal ball to see how much higher, but we know for sure right now that the earnings so far this week and a little bit last week have definitely given a little rocket boost, right? After some pretty tough days. Uh, as you all may well know, we actually changed the outlook for the stock market last Friday to an uptrend under pressure, and one of the reasons was that we were having some stiff selling sessions, and we have 6 distribution days through Friday, added another one on Monday, and you can see that was pretty uh, yeah, exactly. A pretty big drop, but it's been really nicely maintained. You got the Nasdaq composite there, didn't touch the 50-day moving average, just like the S&P did. So, one, we're encouraged that the S&P has had another nice bounce, and two, if you go to the weekly chart on MarketSmith, anytime is fine. Doesn't have to be now. But what's really interesting is that the QQQ, like the S&P 500, has actually made a sort of a 3 weeks tight pattern. And if it breaks out of that pattern, I think the market is going to force their hand to say, hey, we're truly back into a uptrend resumes situation.
Okay, well, Ed, we've talked recently how before this last sell-off, how the queues were getting pretty extended. Do you think that we're getting extended again, finishing yesterday almost 6% above the 50-day line and headed higher again today?
I mean, that could be a concern for sure, especially since the market breadth still isn't great. I mean, we had a couple of days going up the market breadth, but after hitting the lowest levels basically since January, it ticked down a little bit yesterday. We are seeing more breakouts. It's not just Apple and Microsoft and a few of those mega caps. So we're definitely seeing some other techs and some other names, but that is an issue. If you have the queues extended and breadth not very strong, it wouldn't take much to get to a similar situation that we were at like a week or so ago. So, it's definitely a time but there are buying opportunities. So I would say it's a time to be selective and maybe, go in, but you don't have to go crazy.
And Kathy, of course, analysis of overall market conditions is important, but even more important is how stocks in your portfolio are performing. Have you noticed a difference since end of May into June and this month in your portfolio in terms of actionable buying opportunities for your selective style?
Yeah, that's a great question, Ali. And I haven't been very active. I think we've been talking several different times in conversations we've had this past year where, we had the high flyer IPOs from 2021 and they've been consolidating and in some cases are coming out again, like CrowdStrike, which I know we're going to talk about later, and Snap. And then you have the IPOs that came out in 2020 that we're looking at in 2021, and we're in this waiting game. We're waiting for some good setups to be built during this institutional due diligence phase, and we'll talk about a few of them today that now have been trading 40 weeks or more and may be consolidating and may be creating that first mature base. So because that is what I focus on, I haven't been real active because there has been the sector rotation and the other stocks that are doing well. But since I focus on that, I've just been kind of just patiently waiting and staying calm and just waiting for those setups.
And just a primer for those out there in the audience who maybe this is their first time hearing you speak, just a quick primer on what you are focusing on for buys in your portfolio and the kind of stocks that you have seen really make a difference performance-wise that have led you to having this certain approach that you do.
Yeah, so as you mentioned earlier, I'm the co-author of the Life Cycle Trade with Eve Bobach, Eric Cole, and Kurt Dale, and we really wanted to focus on IPOs and is there a way to really pinpoint which is going to be the next big high flyer? And while we weren't exactly able to do that, we were able to identify phases and patterns to look for and then apply our rules to those different phases and patterns so that we can put more odds in our favor of success. And from that analysis, for me personally, I like to wait for this institutional advance phase, which usually is about 6 months or more, maybe one, even 2, 3, 4 years, depending on the stock, and wait for that advance. So usually, there's a pop or a decline, a period of time where the IPO does nothing, and then it kind of resets, regroups, and then has a run. And that's the one I'm waiting for. And so based on that research, that's really what I focus on. And we, of course, have talked about it many times here, and you can learn more from the book.
Perfect. Well, a great primer for those who are new here, which we welcome you all. Let's go on over to Snap, S-N-A-P. Dave, snapping, it's showing some power out of this consolidation on earnings.
That's right. That's right. And boy, 22%. I have to confess, I've talked about this one on the show before, as you know, Allie, and bought it a couple of weeks after the big breakaway gap, after I learned that this company is really turning things around. And this time around, I actually bought shares after the close yesterday, and a little gutsy, maybe a little. Sometimes could be kind of foolish to do that, right? We generally don't like to do much trading in the extended hours, but just like what Ed said, the quarterly numbers were just so impressive that we looked at the breakout level at 70.34. The stock immediately after hours had gotten to 71, 72, and held there, kind of like what we do with our 5-minute intraday chart analysis. If it holds that 5-minute bar and stays tight and keeps going, then you'll have more confidence to actually make positions. So at this point right now at 77, I'm not sure if that's a little too extended. It is kind of within arm's length of the top of that base on the left side, but maybe let's see how it handles itself the first hour.
Well, this move on earnings last October, the stock gained 28% that day and sparked a run. It's up about 24% right now. So maybe we'll check back in on Snap. Just a quick word on why it takes a lot of conviction to do what you did. You waited for the numbers, though, however, to come out first, did that technical analysis. But in general, when it comes to these earnings moves, we like waiting a little bit, like you said. So the first hour, we want to be watching and seeing how it's acting, because the after hours action doesn't always necessarily translate to the next day of trade. We're only 8 minutes in to the regular session here today.
You're absolutely right, Allie. And I just want to make one extra point, is that after establishing that position in Snap, I actually sold calls, and I currently have a covered call at 80 and expires on January. This is a relatively small position because I sold some of that position already, taking a decent gain in the short run, but still maintain a small position to keep an eye on Snap, because thinking, wow, maybe this is just a start back in the summer, or that's right, in the fall of last year, of a mega move. And so what I have to do now is manage this position, whether I roll this January call from with an 80 strike up to a higher price level, or wait a little while and just roll it sideways, meaning try to capture more time premium by, for instance, buying back that January call at 80 and then selling a June 2022 call and see if I can pick up some extra premium.
Thanks so much for that.
I'd like to highlight something on this one too. Allie, if you want,